What's up, everybody? This is going to be a very good video on how to read the tape, which consists of the time and sales and the level 2 in order to make better trading decisions. This is something that every trader has to understand so you can make trades based off of the strength of buyers and sellers over key levels. And reading the tape is also going to help prevent from making stupid trades and avoiding false breakouts over key areas on a chart. In this video, I'm also going to go over how the market auctions and how it facilitates trade. So if you're new here, make sure to drop a like on this video, share it with other traders, and also follow me on Instagram at Ameritrade. I post daily trading recaps along with very good trading tips and tricks. The link to this will be in the description below. Definitely a very good resource. And without further ado, let's get right into the tape. We first have to understand how the market facilitates trade. There's two different types of orders and there's two different types of participants in each transaction on the open market. The first one is a passive order, and this is something we call a limit order. If we put a limit order on the market, it's seen through the order book and it's only seen from the level 2. If I want to buy something at a specified price or better, I'm a passive participant in the market. I'm putting a limit order to buy either on the bid, or if I want to sell something, I'm putting a limit order on the ask. Now, the aggressive order is a market order. This is a different participant. A market order will be seen from the time and sales, and that is a completed transaction. So everything that we see on the time and sales is a completed sale, and that's a completed transaction on the market from a market order hitting a passive limit order sitting on the level 2. So limit orders are adding liquidity to the market because we're obviously fishing. We're putting our order on the market, and as soon as we put that order on the market, you're going to see it on the level 2. Market orders remove liquidity from the market because if you're an aggressive participant, you are market ordering in and you're looking to buy from somebody that's sitting on the ask, selling on the ask, or you're looking to sell a market order to someone who's looking to buy on the bid. For every single transaction, there's a buyer and there's a seller. There can never be more buyers than sellers. There can never be more sellers than buyers. There is an equal amount of participants for each transaction. That's one buyer and one seller. So here we have a screenshot of a level 2. Now, no matter what platform, what broker you use, the level 2 is going to be the same, even for any stock, any future, any option, any market. The level 2 will show you the same amount of information. This is for a stock. It's ticker symbol WKHS. And the left side, let's just split the screen up in half. So on the left side, we have the bid and we have the buyers. And on the right side, we have the ask, which are the sellers. Keep in mind, these are passive participants. They are passively waiting for the market to come to them. They have a limit order if they're looking to buy on the bid and a limit order to sell on the ask. And we have exchanges, and how this works is if you put an order through your broker to buy or sell something, your broker will send it to the exchange, and the exchanges are where the orders are routed through, and the exchanges put them on the market. There's many different exchanges, and that's not really relevant in reading the tape, but if you see these weird symbols, these weird names that look like ticker symbols, these are the exchanges that the orders are being routed to. So let's talk about bids first, or the buyers. Now we have the column which is bid, and we can see the price of the stock. So the bid price is the price that the buyers are willing to buy the stock for, and each bid price has their own bid size. We can see it by BS. And the bid size is the amount of shares that the buyers want to buy, and you have to multiply each number by 100. So what this means is that on the EdgeX exchange, there is a bid for $39.95, and someone or multiple people are looking to buy 300 shares. The next one, we have the NASDAQ, same thing. Someone's looking to buy at $39.95, 100 shares. And it goes on down the list. So the first bid and the first ask are what we call the inside bid and the inside ask. We could also see that on the level 1 data by the bid and the ask, which will show the price and then the bid size. Same exact thing on the ask size, but the ask are the sellers. So we have the ask and we have a price. that's the price the sellers are willing to sell the stock for. And the AS is the ask size on this column, is the amount of shares the sellers want to sell. You have to multiply it by 100. So you have 200 sellers, or someone or multiple people looking to sell 200 shares at $39.99. And you have someone that's looking to sell at $40, 343 on the ask. So you have to multiply that by 100, which is 34,300. So that's pretty much the basis to the level 2, which is the order book. And now we have to go over the time and sales, which we could see right here. So one thing I want to mention about the time and sales is that these are completed transactions where market orders hit the limit orders that were on the level 2. The time on the time and sales is not very important, as everything that's printing on here is going to be right now in the present. It's not going to be in the future. It's going to be in the past as you go down the time and sales, but every order coming through is happening at that instant. So time is not really important. What is important is a couple of things. So on the time and sales, we have the price that the completed transaction was on, and we have the size, which is how many orders, or how many shares were in that transaction. So on the time and sales is different than the level 2 because the number on here does not have to be multiplied by 100. This is the true and actual order. So we use the level 2 and time and sales together as a very good tool to gauge if sellers are strong, are buyers strong, is sellers weak, are buyers weak. And this is only important on key reference areas on a chart. If you're looking at this at a random price where, price is really, chopping around, not doing anything, level 2 and time and sales is completely irrelevant. You have to do it at an important area that makes sense on a chart, whether it be support, whether it be resistance, whether it be a high, whether it be a low. It has to be a key area. And what's key is you want to see intention. So intention means, are there huge sellers sitting on the ask? Are there huge buyers sitting on the ask? Who is getting wiped out? Who is getting taken away? Is it a fake order? Is it a real order? So I have a love-hate relationship with the level 2 because these are orders that are not really completed. You could have somebody that's spoofing the market, making themselves look like a very heavy seller, when in all reality, they could hit one button, cancel their order, and boom, it completely disappears from the level 2. It scared the participants, and they're basically on the other side of the market, soaking up and leveraging in their position. But that gets more in depth. That's something I talk about in the course. What we use this for is to see almost like a Great Wall of China. Is there a huge wall coming up to the price of the stock? And how do we know that? Here, for example, on WKHS, we have a seller sitting at 40 for 343 shares, 16 shares, and then 14. You have to multiply that by 100. So 1,400, 1,600, and 34,300. So that's going to be a huge wall. What that means is there has to be very aggressive buyers wiping away those passive sellers which are sitting on the ask. That is the only way price is going to break $40, or if those passive sellers, like I said, remove their passive order and the market now has not a very strong wall to get to break through to pass through 40. If this video gets 732 likes, I will do another level 2 video with all examples. Now that you get the point of what to look out for, I'll show you real live trades on how to utilize the level 2. 732 likes on this video. To get more context with this trade, Tesla was all-time highs. So usually what I like to do is hold psychological numbers, 800, 900, 1000. Especially at all-time highs, are going to serve as key reference points for me. And again, this has to be with context. It's only going to be relevant if you see huge sellers sitting at the $900 mark. So let me try to pause it as price is coming up to 900. I mislabeled this price level to $900.80. This is meant to say 900. So briefly, what's going to happen here is we fail to break and hold above 900, which is a very strong side of weakness. So let me play it out. Let me try to pause the video when we get close to 900, just so I could show you what the ask size was like right here. So I missed it by a couple of seconds, But as you can see right here, we have an ask size, if you look at the bottom right, of 282, 59, 44, 10, 5, all stacking through the $900 mark. So think of that as a huge wall, and for us to pass through that brick wall and knock it down, we have to have tons of aggressive buyers buying from the sellers sitting at the ask. So what you want to see if the breakout is going to continue is two things. You're going to want to see these sellers get wiped out. You're going to want to see $900 come through on the time and sales, but you're going to want to see 900 stay above and for it to act like support while the buyers on the bid, as price is coming up, get stronger. The one thing you do not want to see, which means a sign of weakness, is price to break through 900, not a lot of orders coming through, and you don't want to see any weak buyers on the bid. You don't want to see light size, and you do not want to see heavy sellers sitting on the ask. So watch what happens as we break 900. This is a false breakout, meaning we get above it and we completely reject, which was set up to be a very, very nice short opportunity. Another key thing that you could use here for the time and sales is the speed of the sales. If you start seeing the time and sales speed up like crazy, like almost like a ball of energy, and price cannot continue moving higher, that is a sign of absorption, meaning you have orders coming through, yet you have a hidden or a passive seller on the ask, which we're not going to see, absorbing all those orders. So watch what happens. We break 900 right now, and no heavy size on the ask. Buyers really are not stepping up either, but watch, 940 trades, and there's really no orders coming through above 900. It really, volume came through, so that order got absorbed, that sell order, and if there is zero follow through now to the upside, that is a key sign of weakness, a key sign of rejection, and more than likely, if you're in this trade long, you're buying a breakout over 900, that is your sign to either get out or open up a short position, because this is going to be a very important failed breakout. High volume with no follow through is a sign of a reversal. So fast forward this, you're going to see what happens. I mean, that was the high. We failed to stay above 900. Sellers were very weak. They tried taking us above those buyers, yet there was somebody sitting there absorbing those buy orders, hence the volume pressure, and price started selling off and then came down going into, right after that. So if I fast forward it, show you what it looked like. That 900 was the high. That was also the heaviest volume of the day. So here's another example on Tesla. This is really not so much of using the level 2 in time and sales, but this is using it in conjunction with market context and with understanding the auction process. So price was selling off into this demand zone. Let's say we never got long at the 660 once we came to the first test of demand. Demand means buy. You want to look for a nice buying opportunity down here. Now price is selling off. We're coming down into the zone. Volume is increasing inside of demand. Volume and price are your key stories. As the speed of the tape or the time and sales comes through, you should see more volume start to flood as more completed transactions come through. So if we start selling off, yet buyers are holding above, we double bottomed in demand, there was no follow through to the downside, that is a good sign that the market may reverse here, especially that we are at this demand imbalance, which is the core to my trading strategy. I don't use the tape so much with supply and demand. However, it's very important to understand it with a strategy and with market context to understand each participant interest in the market, because we could catch very nice reversal points like we did at this double bottom at Tesla demand. That was a beautiful bounce right at the 661 demand zone. WKHS, to get more context, resistance as at $40. It's a whole number. This also was the high of day from the day previous. So a very key area of resistance, a break above 40. This broke above it, but after 3 or 4 tests. So this is another thing. People look to, buy on this breakout, but you have to make sure that buyers are actually buying on this breakout and you join them. You don't want to hop in too early if there's not really buyers buying this, because then you're going to get faked out. And if you're not sized appropriately and you don't accept your risk, you might have to hold a little pain for a quick little pullback. So watch what happens. There's not too much size on the ask. However, price broke above 40. Volume was spiking. It was the highest volume of the day, yet not a lot of tickets were coming through on the time and sales. So fast forward this, we break above 40. What you want to see on a breakout over a key level is price to really push up above that area, bid stepping in, and 40 consistently coming through on the time and sales, consistently with heavy size through on there. And you don't want to see any strong sellers sitting on the ask. So volume's coming through, selling pressure is increasing on this candle here. We're failing to really hold above 40. A breakout should happen right away as more and more buyers come into the market. We can confirm it with volume, but this volume, the highest of the day, is really not getting anywhere. These buyers are not getting rewarded, and price momentarily stalls out at this $40 mark. Here's another test of 40. Really no heavy size on the ask, so this is looking like a nice move. Volume is starting to increase. However, price is still having a very hard time at this thing. For me, the best trades work out right away. We break over a key area, it has to work out right away. You want to see price keep ticking higher and higher, meaning bidders are bidding higher and higher as price is increasing. And here's the break of 40, so we're finally above it. This is the true breakout. See how price keeps ticking higher and higher. So what you want to see here is, now look at the buyers now. The bidders are bidding kind of higher. Sellers are there, yet look, 130 sellers sitting at $40.20. Boom, he was taken out. Volume starts increasing, as we can see with the green prints. And I know this is later in the video, but green prints do not mean buy on ThinkorSwim. On other platforms, they mean buy. However, on ThinkorSwim, buy just means an uptick, and green just means an uptick, and red just means a downtick. Boom, we tick up higher. Bidders are getting stronger, as we can see here. Not a lot of sellers sitting on the ask. As price pulls back, it gets bought up by the buyers. And as price moves higher, we're seeing volume coming in. We're seeing tickets come through on the time and sales. And we're not seeing any obnoxious, really heavy size sitting on the ask. Now, once we are over a key level, this is where resistance becomes support. You want that area to act as support if price pulls back, and we want it to hold that level. We got some nice follow through on this name. And if I fast forward to later in the day, if you look at what happens, the minute we broke over 40, we had a nice $1.50 move, $2 move actually, on a $40 stock. So very, very nice move. Then we pulled back and we held the 40, acted as resistance. Finally then broke above high a day by end of the day for another $1 move higher. So if anyone is going to complain about a $2 move above a key level for scalping with no real pullback, then I don't know what to say, but this is really for scalping only. This isn't for a directional trade. This isn't for a trend trade. This is really for scalping over key areas to avoid false breakouts. I'm going to end the video here. I could go on all day long showing you examples of many different tickers. I'll save that for another video. If this does get 732 likes, I'm going to end it here. If you learned something, just drop a like on it, subscribe to my channel. And if you really want to learn more, check out my website in the description. I offer a very in-depth and educational course. But besides that, I'll see you all at the next video. Peace.